What's up, everybody? Welcome back to The Run with me, Manny Wilson. So today, man, I want to talk to you about stocks and investing. So first off, before I say only stocks, any type of investment that's bringing you a profit without you having to do a tremendous amount of work, I think it's a good investment. As long as your money is working for you and is not the other way around, I think it's a good investment, first off. So I'm not only entitled to stocks, and some of this information may even apply to other things outside of stocks. But I'm well familiar with stocks, so therefore I'm going to talk about the stock market and certain things to do and not do when investing in the stock market. And actually how to invest into the stock market as well. So for me, the way I started, it was I always wanted to invest my money in somewhere else because I didn't really want to work for anybody from the jump. I always felt that I wanted to be independent down the road. I'm like playing Monopoly as a kid really brought that to me because I seen how in the game, if I'm investing in good properties and it's bringing me profit, why not try and do the same thing in real life with something? And at the time, I'm still learning about real estate, so I'm not too sure about every single thing in real estate, and also I'm still learning with stocks too, because I'm a firm believer in you never know too much. You can never learn too much. However, with that being said, there's multiple ways to start investing in stocks. You can use Ameritrade, Robinhood, Webull is a good one. Multiple things, just any platform that lets you trade. But the main misconception that some people have about the stock market, or the reason why they're scared of it, is because they're scared of the unpredictable. They're scared of the unpredictable personality that the stock market has, I should say. Because you can never tell. If there's not a science, there's not a math equation, there's nothing that can actually predict if a stock is going up or down. Or there's nothing that can tell you, oh, well, this stock is going to rise 100% or whatever the case may be. There's not a single mathematic behind it or scientific whatever behind the stock market. It's kind of intuition based, and it's heavily based on the news. So that's definitely important when you're thinking about investing in stocks. You want to pay attention to the news. See what things are happening with certain companies. See what events is going down. See the latest news of a company and all kind of stuff, because that's gonna that's the best way, in my opinion. That's the best way to tell if a stock is going to go up or go down based on the news that you receive from outlets. But you always want to fact check. Always fact check these sources. Always make sure it's not coming from somewhere fake, because some people do that. They'll put out fake news so fake people, or so real people can think, oh, this stock is gonna go down, so I'm gonna sell. Now the stock is decreasing, and it's working in their benefit because they put a $24 call or a $24 put on a certain stock. That's a different story. That's more into it. People who invest know what I'm talking about. But it's okay if you don't. Anyway, there's more things to it. Another misconception is that, oh, well, I'm not trying to wait until 6 years to see a profit. And if you feel that way, that's on you, man. That's on you if you don't want to wait that long. But sometimes you got to play the long game. Sometimes it's good to have a long-term portfolio as well as a short-term portfolio. Either way, you're still making money, so I don't see the harm in it. I think it's personally good to do both. I think it's good to have a long-term plan and a short-term plan as well, and when it comes to investing in the stock market. Because if you're doing a short-term plan, you know certain stocks, and you know you're going to make money. I would say this before, if you decide you want to do a short-term plan, first off, don't assume you're going to get rich right away. Don't assume you're going to come out the gate as soon as you're ready to day trade making $6,000 a week. It's possible. Don't get me wrong. It's definitely possible, but it takes time to learn it. You got to know what you're doing. You really got to be up on it. And have it down pat. It's going to take a lot of practice if you want to get to that point where you're making $6,000 a week, or even if you want to just make $500 a week. You still got to practice. But also there's that possibility that you may lose money. Now, I know that scares a lot of people if you're listening. I know that scares. Oh, I don't want to lose any money. I don't want to lose any money. But the only way you're going to lose a tremendous amount, say if you put in $300 and you're scared, oh, I don't want to lose my $300. Only way possible, in my opinion, that you're going to lose $300 is if you're not paying any attention. If you're day trading, making trades after trades every day, and you're not paying any attention to the stock market, that's the only way possible, in my opinion, that you could lose $300 if you invest $300. Because you're going to see the number decrease day after day or hour by hour, minute to minute. You're going to see that number decrease multiple times if you're paying close attention. And it's on you to decide, oh, well, I just lost $10. Should I pull out now? Oh, I just lost $20. Should I be done? And that same way, that same strategy works going upward. If you're making money, it's on you on how much you want to make. If you're day trading and you're like, okay, well, I invested $300. Hopefully I can make $400 by tomorrow. Hopefully this stock goes up and I make $400 by tomorrow. If you do that and you're up $150, that's on you to decide, am I okay with keeping this $150 or what do I want to push these limits, maybe get to 200? But then again, you got to keep in mind that there's that risk that, okay, if I'm at 150 right now, I'm up on a stock 150. There's that risk that if it goes down, I'm going to be very unhappy. So you got to decide within yourself, do I want to take this money and call it a day or what? Because truth be told, what you think is a lot of money may be very little money to someone else. And the same thing goes vice versa. What's a little bit of money to somebody else may be a lot to you. So that's why you got to come in with your set game plan, come in on your own and know that, okay, well, my plan with this stock, I'm going to invest $400. I only want to make $100 off of this stock. You got to come in with your own game plan, because if you go based on somebody else, like I know damn well I'm not sitting in the same category as Jay-Z. So if I'm trying to play my money as if I got Jay-Z money, or trying to make profits as if I got Jay-Z money, of course I'm going to look like a damn fool, because that's not me. That's not my lane. That's not my lane. You got to stay in your own lane when you're investing. You got to go at your own pace, especially when you're day trading. You got to go at your own pace, and you can't you can't count pockets. You can't count everybody else's pockets. Yeah, they may make a good profit, but at the end of the day, you want to worry about only making a profit. $20, $40, $100, $300, $4,000, whatever. You want to worry about only making a profit. That's the important part when you're investing in day trading. That's the most important part, is making a profit, not losing money, not walking away with $0 or possibly even in the negative. So before you start day trading, I highly recommend you pay attention to these news sources. Pay attention to a lot of the things that's going on with these companies, whether it's layoffs, whether it's bonds that they're getting, or other investments in other companies. That is going to probably be your most useful source. Because it's not a science. It doesn't come down to a science. The stock market doesn't come down to a science or a mathematic equation. It doesn't happen that way. It's predicted a lot. It's kind of based on intuition and what you see in the news and the popularity of what people think. So if you're looking at a stock and you see that the news source for this company just released something that, oh, well, now they're going to partner up with another business that's going to possibly help them. It's on you to decide, oh, is this stock going to go up now? Or is it still going to hurt because it's laying off a lot of people right now? So it's on you to decide that. And you play your cards however you want to play that. But at the end of the day, you can't be scared and be like, okay, well, I don't know. It might not go up. I don't want to lose $25 if I'm investing $400. Like, I mean, is it worth it? If you know there's a possibility that you could receive an extra $150 if you invest $200, but there's also that possibility that you may lose $20, would you do it? If there's an outcome of possibly making $150, but the flip side is you may lose $20 on this investment, would you do that? Because if you're paying attention, you have your limit of, okay, I want 150. The maximum amount I will lose on this deal is $20, or I'm not even willing to lose anything on this deal. That's based on you. Definitely watch YouTube videos or whatever the case may be. If you decide to day trade, watch a lot of YouTube videos. Just educate and educate and educate. Like, I don't have it all figured out. I'm still learning within myself because honestly, you can never learn too much. So yeah, I may know a little bit of things about the stock market. I may know some things about day trading and long-term portfolio, short-term calls, puts, and all of these different things. But at the end of the day, I don't have it completely figured out. And I don't have it completely figured out. I'm still trying to learn as well. And it's a never ending process, whether you're doing long-term investments, whether you're doing short-term investments. Either way, it's a never end. You're always going to keep learning. And that's the way you got to adjust. That's the reason why some of these companies go bankrupt, because they're not willing to adjust. And that's also the reason why some companies have so much success, because they are willing to adjust and change up things that they're doing in the company. So you got to pay attention to the news. That's out the way. Okay, now long-term portfolios. I think they're also good as well, because years down the line, you got something added up. You got something. You made money without even thinking about it. You made money without even doing work to make that money. Your money was working for you, and you ended up making that money. So why not? Why not? And long-term portfolios, you don't have to worry about losing money as much, as long as the company is in great hands and the company is doing what it's supposed to do and going up and increasing and making changes and adjusting with the new world technologies and all of this other stuff. As long as the company is in good hands and you play, I don't want to say play it safe, but if you're a new investor and you're going for long-term, that's kind of the advice I do want to give you, is to play it safe in that case, because you know, if you, like, most people know Apple is going to be around for a minute. Like, I wouldn't advise a lot of people to buy Apple, because I think it's multiple different ways you can make money in the stock market without Apple. But if you was like, okay, I want to make money 10 years from now, I want to have however much money you want to have, then yeah, Apple will be a good investment, because it's safe. You know it's going to go up. You know it's going to be around for a minute. You don't really have to worry about losing money down the line as years play out. So I think it's a good investment, of course. But long term is definitely different than day trading. Day trading is more so of a quick grab. I'm trying to get this money and get out. I'm trying to make my money from this stock and then be done. But when you're long-term portfolio in it, or I just created a word, but when you're investing for long-term, just as long as it's a smart investment, the company is on the right pace, you should be doing just fine. But definitely still pay attention to all these news sources and fact check everything. Make sure the news source is great. And with all of that being said, do something positive for anybody. Do something positive, whether it's for yourself, make yourself feel good, or make someone else feel good. But whatever you do, man, just be nice and make sure it's helpful to somebody, whether it's yourself or other people. With that being said, man, we're going to wrap it up. And I appreciate you for tuning in. It's The Run.